Take a look, traders. Here on dollar yen pair we have the perfect example of a head and shoulders pattern. In this video I will teach you how to trade this pattern. We will discuss the entry rules, stop placement and target selection. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. Let's discuss the theory first. Head and shoulders pattern is the reversal pattern, and usually it forms when buyers are exhausted, and once the pattern is formed it indicates a highly probable bearish reversal. And there are four main elements of this pattern. The first element is the left shoulder. It is when the price bounces, sets a new high, and then retraces and sets a new higher low. The second element is the head. It is when the price bounces again, sets a new higher close, but then drops and retests the level of the previous higher low, setting an equal low. The third element is the right shoulder. It is when the price bounces, but it does not manage to reach the current high, the head level, and instead it sets the low high. And by the way, traders, remember that even though in the books we see the head and shoulders pattern with the equal shoulders, in practice it is not compulsory and shoulders should not be equal. And the fourth element of the pattern is the neckline, because once the price completes the right shoulder, the price tests the level of the previous high low again. So that right here, the price sets three equal lows. And once you spotted this pattern, it is not a trigger for you to sell. Remember that the pattern formation is just a warning, but the trigger that you should look for to sell the market is the breakout of its neckline. Only when the price violates its neckline to the downside, only then a bearish continuation is expected. Now let's discuss how to trade that and how to apply all this knowledge in practice. Hey traders, learn how to trade in my premium educational group. There on daily live streams I will show you my active trading positions. There I will show you the trading setups that I'm currently looking at. If you want to combine the learning and earning experience, it will be the best place for you to be. For more info, check my website. It is vasilytrader.com/private group, or text me in one of the social networks. I will give you more details. So we spotted a head and shoulders pattern on dollar yen pair on a 4-hour time frame. And once you spotted this pattern, remember to execute the so-called key level check. According to my rules, we trade the price action patterns that are formed on key levels. And for you, it is very important to check whether the pattern is formed on a key level. And we are looking for key levels on higher time frames. And I usually analyze the structure on a daily, and on a daily I look for key levels. And here, analyzing the structures, you can see that here we got a very strong support, right? And 2 times in a row, the price nicely respected that. And then the structure was broken. And of course, according to all rules, that structure turned into resistance right now. And you can see that the wicks right here are perfectly respecting that structure. And you can see that on a 4-hour time frame, we perfectly respected that resistance, and once the price was forming the head of the head and shoulders pattern, the market dropped nicely, testing that resistance. So this pattern right here is valid. You can see that we have a left shoulder, we have the head, and we have a right shoulder. And again, you can see by the way that the levels of the highs of the left and right shoulder are different, and it is not a problem. They can be different, but it is not compulsory. Remember about that. And here, what I also wanted to show you is the neckline, because trading the head and shoulders pattern, the most complicated thing in my view is to correctly draw the neckline. And when you are drawing the neckline, you should consider the lowest wick right? And you should consider the candle closes. Yes, so you can see that here the neckline of this head and shoulders pattern is based on the candle close right here and the lowest wick. And the breakout of the neckline will be confirmed only when the price closes below that entire area. Only when we close below that on the 4-hour, only then we can sell. Once the candle closes below the neckline, we set our sell limit order on a retest. And it is very important for you to know where exactly you set your entry. Your entry is based on the upper boundary of your neckline. So if the price breaks the neckline, we will set our sell limit order right here on the retest. By the way, traders, if you want to learn why to trade on a retest, watch this video. There I explained the main reason why to trade on a retest. So setting our sell limit right here, where will be our stop loss? And here are two ways. There is the aggressive way and conservative way. And I consider myself to be a conservative trader. So I set my stop loss always above the head of the head and shoulders pattern. But you can set your stop loss above the right shoulder, of course. But win rate will be a bit lower if you do that. So setting our stop loss above the head, our target will be the closest strong structure support. Our closest strong structure support is right here. Yes, it is the current low from where the market initiated this bullish movement. So here will be our take profit. One more very important tip for you right here is that trading the head and shoulders pattern, we should always protect our position. Yes, and we start protection of our trading position once the market reaches some minor structure. Yes, minor structure lying a bit above our target. Our minor structure, traders, is right here. You can see that from that point recently this bullish movement initiated, and it was important for the market participants. So once that support is reached, what you do, you take your stop loss and move it to entry. And doing that, you make your position risk-free. Also, traders, remember that here trading dollar yen pair, we will trade with the trend. If the price breaks the neckline, if we open a short position on the retest, we will follow this bearish trend. And of course, the market may drop much lower if it violates that support. Remember that you can always take partial profit once the market reaches your target and then wait for a breakout. Yes, if the price breaks that support, the market may go much lower, and then you can apply a trailing stop. And if you want to learn how to apply a trailing stop, watch this video. There I explained my trailing stop strategy. One more very important rule that we should discuss is the so-called pattern invalidation rule. Because quite often when you spot a head and shoulders pattern, the market will bounce from a neckline, and occasionally from a neckline the market will go higher to new highs. So you should know when your pattern becomes invalid. If the price bounces and violates the level of the right shoulder, the pattern still remains valid. Yes, and higher it goes, you can still wait for breakout of its neckline. You can still look for an initiation of a bearish movement. However, if the price bounces and violates the head level to the upside and sets a new high, that will invalidate the pattern. Remember about that. You can see that here on dollar yen we see a bullish reaction from the neckline, and the pattern will be valid till the price is trading below the head level. But once the price sets a new high, the pattern will become invalid. And I know that many of you are wondering, how do we deal with the inverted head and shoulders pattern. There, the rules are similar. And here is the example of the trade that we took with my students trading pound dollar. Here we spotted the inverted head and shoulders pattern. We were waiting for a neckline breakout right here. The position was opened on retest. Stop loss was lying below the lows of the pattern, and take profit levels were based on the structures. Head and shoulders pattern is one of the most accurate price action patterns, and I really want you to try this trading strategy. I really want you to backtest that, and I guarantee you that you will be impressed how accurate this strategy is. If you have any questions, if something is not clear in my analysis, remember that you can always ask me in the comment section. Also, traders, let me know in the comment section what pattern do you want to learn in the next video. Also, traders, please like this video, subscribe to my YouTube channel, and I will see you next week. Thank you so much for watching.